Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with this Friday expert, and we're flipping the script. I'm interviewing Ty. How you doing, buddy?
I'm doing great, Michael. I love being in conversations with you, man. It's so much fun and I learn a lot and you ask great questions. So thank you.
I appreciate that. In episode number one, we talked about what you were doing to survive this winter. We've talked about the housing slowdown for a while. You talked about tighten up your buy box. You're going closer to home versus spread out. You're going deeper in your niches. Really, it's about staying on the track, right? To using the race car analogy, it's raining or snowing, and you got to stay on the track to win. So you're slowing down, which I think is awesome. Now, we just finished this amazing event that you put on. I was a pleasure to speak, but even more of a pleasure to be in the audience and just soak in all the information. Where are you going with this? Because your session after mine, where you talked about creative financing being the opportunity, it's to me, it's where I want to focus. It's a set of tools that I simply don't have. I don't have. I've been doing this 20 years and I don't have them. So I plan to deploy less cash and secure more assets. So let's tell people what that's all about and why you're excited for it in the next couple of years.
Yeah. So a couple of things, and I'll share that, my whole entire career, even before I got in the business and before I started, I was a student, right? So just like I was kind of remembering my student path, and I remember like reading Robert Allen, Nothing Down for the 90s.
Mm-hmm.
And then somebody gifted me the Carlton sheets, right? They bought it. They didn't do much with it, but they were like, hey, I could see you doing something with it. So I remember going through all of those, buying courses, doing the work, really like going out and driving neighborhoods and looking at properties. And just like what you talk about doing the work. And actually, I can remember going to real estate offices and getting the MLS, looking through the MLS books and writing the addresses, and then going out and driving properties back in the day. So, in terms of doing the work, it's such a critical piece. And I would say that seller financing, the thing that I've been doing it my whole entire career. I've had success with it. I've had incredible success. I've made some mistakes with it where I had stuff that was seller finance and I should have kept them, where I refinanced them and I should have yeah, right. So even like zero interest, such a great opportunity, low interest. But the thing that got me most excited, you said, Michael, on about maybe 2 or 3 weeks ago, and it was so subtle, like it's being able to hear those subtleties. You said that basically in your research with Black Knight, and I'm going to may misquote it, but about 80% of all mortgages in the United States had a 4 or less on them. What is the quote?
I think the number is 73%, but yeah, we can round it to 80. The fact is 4 out of 5 mortgages have this is residential mortgages, have a 4 or lower. The Fed broke housing. It's an entirely different game. It's like, I've been doing this 20 years. You've been doing this 30 years. You and I have not ever invested in a market where the interest rate on the asset is the asset. You and I have been doing this, in 2007, 8, 9, where the debt was a problem, right? It was toxic, really bad. This hasn't happened since 80. This is really Robert Allen, Carlton Sheets kind of stuff. It's 40 years ago, right? If you're in your 60s or higher, maybe you've done some of this. You and I haven't seen it. Yeah. Our entire career rates have generally been going down.
Yep.
I'm afraid that for the next decade, they may be going up. So that 30-year mortgage is an asset for my first time and yours as well. It's going to be wild. And again, I don't have these tools. I don't have these experiences. I want to do it, but I have to learn. I have to learn from guys like you. So thank you so much for having me.
Yeah, no, and the thing I would share too is that it's interesting because through asking really good questions of the seller and really understanding the seller's needs, a lot of times for a seller, it's a burden to get this big chunk of cash, right? If you sell a property, they sell it, you buy it for 400,000 or whatever the number is, 350, and they get this big chunk of cash. And now what do they do with it? They put it in the stock market, they put it in the CD. That's like basically, again, I don't really believe in, I don't invest in stocks, but a lot of sellers don't want that. So it's like, how can they upgrade their position? And I love this is that, upgrade their position from a landlord to the lender, right? And that how can they basically still be tied to the asset, which they know so well, an asset they're incredibly familiar with. But the idea is that now, instead of having the obligation of dealing with tenants and toilets and taxes and the burden of being a landlord or undervalued rents, that's a big thing too. Talking to a guy today, $1,350 rent, and the rent should be like $2,500-$2,800.
Wow.
And there's no way that he can ever take it to that point. And he just doesn't have the wherewithal to go through the friction with the tenants or replacing a tenant. But it makes sense to where he can still get an income stream of $1,300, $1,400, $1,500 a month by seller carry. But also now there's an opportunity, and there's enough opportunity there where an investor like you or myself can go in, buy the deal, structure a win-win deal where he still has the income stream, but now we have the upside of the opportunity through repositioning that asset and that property. So there is a lot of opportunity here within this niche.
Yeah. The one thing I will put out there, but I want to ask you if you see it the same way. I suspect I will buy or own, control more assets with less cash cumulatively. If I look over the next 3 years versus the last 3 years, right? The things that I bought over the last 3 years were either all cash or high down or whatever, just because you had to have speed and cash to win. I fully anticipate, and it's going to be slow, right? I haven't done a deal yet this year because I think all this is building, and then it will eventually break, where I'll do more seller carries and seller financing. I've followed your lead. I've taken PropStream. I'm sending mailers, right? PropStream, as you told me, is how do I ask intelligent questions? Well, for me, it was duplexes through quads, residential, high equity, and a couple of buy boxes. I'm just following the lead of people like you who have done it before and are doing it now. So how about you? When you look at the next 3 years, do you think you will control more assets with less cash, or are you still just going to feed the transaction engine, or what's going to happen in Ty's business in the next 3 years?
For sure. Assets is the name of the game, 100%. And I think definitely less. It's interesting. Even like this morning, I turned down a deal for two reasons. One is it was a seller finance deal. It was a subject to with a little bit of seller finance, like a hybrid deal. But the problem with it is that it was above the median value.
Ooh.
The rent equation and the payments. There was a little bit of cash flow, but not enough to move the needle.
Yeah.
Too narrow. But the big thing was it was the cash intensive. It was basically all in with closing costs. It was going to be over 20% down.
Oh, wow.
And I'm like, there's that cash on cash return. It doesn't make sense.
That is yield, folks. That is yield. We do yield in my course, How to Get Started One Rental at a Time. Nope. That's bad.
By the way, everybody, if you're a listener of this, you need to buy this man's course. It's the best value in courses. And let me just tell you, it's funny because I'm talking to another buddy of mine. He's like, yeah, I'm spending another $20,000 to work with this coach.
Yeah.
The guy, my buddy, he spends about $150,000 a year, but he makes $3 to $5 million a year, has for the last 20 years. Even in my business, we'll spend typically anywhere from 50, 70, sometimes six figures on coaching, seminars, masterminds, development, all of that. But I would say, how much is your course, Mike?
It's $320. It's crazy.
300. Yeah. Like you can't even literally, it's so ridiculous. And not only that, but there's a lot of other people teaching courses. But the problem is they're teaching stuff so far out above where if they don't know what you're teaching, they might win. They might not, because they take on unnecessary risk and they don't understand some of the real simple, basic foundational things you teach, Michael.
Yeah. It's buy box daily discipline. We talk about getting to 4 fixed rate debt. You only do great deals. This is the time. This is the time to do the work. We've been begging for a slower market. It is without question a slower market in most of the country. I think it slows down more, and that just means opportunity.
Yep.
And I'm ecstatic. The last 2 years were hard. I didn't get any deals out of the MLS for 2 years, and that was my whole career. MLS. Everything I got was network.
Yep.
I think the next 2 years we're gonna find stuff in the MLS, and it's just a good feeling. It's a great feeling to know you're changing lives. I get notes almost every day. You see the stuff in the Facebook group. It's truly working. And $320 plus the bonus, plus the Saturday deep dives, plus the Facebook group. It's the best value out there. It's no question.
And we're going to even still. So I did the bonus module where we talked about pre-foreclosures. We talked about the opportunity and pre-foreclosure. It's interesting. So I've been looking at the pre-foreclosure, the buy box that I have set up for the East Bay and the markets that I'm in. I'm seeing 40 to 50 new pre-foreclosures a week for the last
That's awesome.
3 weeks. So it is starting to happen.
Coming.
It's a trickle. It is a trickle. And the conversations are opening up because now also too, because the tide has turned.
The media, right? It's bad. The housing market, and it's just right. I mean, that's why my card, and I'll be using this card probably for the next year, says housing crash coming.
Yeah.
Right? I'm hitting the red button. Everybody's talking about it, so I might as well push the red button too.
And I want to just say, so kind of back to the creative finance, to the seller financing, to the hybrid, to subject to, I believe that people can get into deals as an investor, which this is unheard of. As an investor, I believe you can get into deals all in with your closing costs, your, down payment, all of it. I'm seeing deals myself at 3 to 5% down.
Absolutely.
All in.
Yeah, I am pushing a strategy because I'm trying to lead people and help people and mentor. I'm trying to push a strategy that I'm calling 50-40-10.
Yep.
50% first with a non-QM lender, 40% seller carry, and you're only putting 10% down. I think I actually got a note from somebody the other day that did a deal with 7% down. I'm like, this is exactly it. You have to believe it's possible. It's not easy. They're not just laying on the ground to be picked up, at least not yet, but they're out there. They are out there. You got to believe.
You got to believe, and they're out there. And so it's interesting too, that even with your course, we will do a module of seller finance. So that's the next piece that I'm going to do as a bonus.
Oh, wow. Thank you.
Yeah. So I'm going to do a piece, just, an overview. We'll go a little deeper, maybe on a Saturday or something.
Perfect.
But I just love, I got to say that even beyond a course, what I love what you're doing, Michael, and it really became clear to me at the event, is what you're doing, what we're doing collectively, is we're building a community.
That's what I'm trying.
We're building a community, and you have that already. And I didn't consciously say, okay, this is what we're doing, but it's not about courses. It's not about being an expert. It's not about selling stuff, but it's really about a community, a collective community where we get together, we share, everybody's moving forward.
Mm-hmm.
Everybody's growing, everybody's, creating better household wealth, income, opportunity. That's what you're doing. And the way that you do it with your Facebook group and the Saturdays, and the way that you just by the way, for everybody out there, if you're watching this man gives, he has, how many videos do you have on YouTube?
I think it's 8,000 now.
8,000 videos. So it's you give so much great content and awareness, but not only that, but even through the anticipation of, okay, here's what's going on in the economy, and here.
Yeah.
So
you can go back and watch the daily financial news for years to see what was going on that day. It's that has been going on for over 1,000 days straight. Never missed a day. Didn't miss a Christmas, Mother's Day, birthdays, New Year's Day. Didn't miss a day. I even did one that I didn't finish, but I tried to, the day after my dog Jimbo passed away. That was the hardest day to do. I had to shut that one down, but I gave it a shot because I didn't want to miss a day. So it's important. I want to give back. I am playing a different game. I am trying to build something that lasts 50 years after I'm dead. So people don't realize this. I spend on the order of 10 to 12 grand a month on my channel. I'm negative every month. I happen to have a lifestyle that I can do that. Not many people can. You want to know why I don't do crash videos? Because I don't need the clicks. I'm here to help, right? I'm not going to put out something intellectually dishonest to get more clicks. So yeah, I've been spending 10 to 12 grand a month for years. I've spent over 150 grand on this channel, documented. So I've done the math for people. But yeah, I'm playing a different game, dude. 50 years. That's every day I wake up, I'm playing for 50 years. So it's kind of fun.
I love it, man. And I love, like I said, I think the legacy of all of this, and it's always fun. Like you said, I went back and watched some of the videos from a year and a half ago, or even from the beginning of the year. Mm-hmm. And I'm just if you were paying attention and watching the videos, you're not stuck in bad deals right now. Yes. You weren't stressed over the last 90 days because you got in over your head on some project.
We kept trying to ring the bell. What? Real estate slowdown, real estate slowdown, real estate slow. And dude, there were a lot of Bay Area reps that lit me up. You don't know what you're talking about, blah, blah, blah. I'm okay, just wait. Now, what do you think? Yeah, it's pretty funny.
I love it. I love it, man. I'm excited for what we're doing. Seller financing, creative financing, sub-to financing, one rental at a time. And I love too, like with Thatch, I love like you and Thatch were like, why do people, I would just want to throw this out there because it's so fresh and so like deeply rooted. Like people want to go out, oh, I'm going to go buy a 200 unit apartment building and do a syndication, or I'm going to go and do all this stuff. And why would you do the headache of 200 units when you could own 8 units, 8 single family houses, 5 single family houses, 10 single family houses, and have a much better quality of life, a much better income, a much better lifestyle, you know? So speak to that, Michael, like share that part, what we were talking.
I think that's actually going to be video number 3. Let's actually make video number 3 all about the amazing man and human Thatch Nguyen. So before we do that, let's wrap this up. Ty, where can people find you?
So I'm easy to find, tylg.com, lg.com. We've got video links. We've got, you can text me, you can join our community just to stay connected. I love everything we're doing in our community with one rental at a time. We've got an Evo community where we work with agents and real estate professionals, agents, brokers, showing them how to invest and do creative. So super cool, Michael.
Awesome, buddy. Well, let's episode number 3 will be all about the wonderful human being Thatch Nguyen. Thanks, Ty.